Hi everyone, hope you're doing well. Today we're going to talk about Warpaint. Obviously, I think this one has been highly requested, and my thoughts on Warpaint after the update that came out today. As you've probably already seen, and as you can see here, the stock is down 18%, having a pretty decent whack. Did have a little bit of a bounce as the day went on. I think originally it was down 20 something percent, so a little bit of a bounce from where it opened up at 8 a.m. But yeah, down about 18%, which I think is about fair enough. I think when I saw the update this morning, I think I put on the Discord, I was like, this is a 10 to 20% drop on this update here. It's not a good update, and yeah, that's the way I'd sum it up. It was a pretty awful update from Warpaint. If it hadn't already been down so much, this is one of those updates that could have had a significant drop, but I think some of that was already priced in, and that's why the stock didn't drop as much really. So first of all, first thing I want to say is that I just want to follow on the point that I said yesterday to you guys, is that Warpaint, officially I think we call that one a leak. I think that unfortunately, just checking my microphone's still on. I can see this being a long video here. I've read this interim results probably about 3 times today just to kind of see what went wrong with the company. Yeah, so first of all, I want to say, I think it's clear that unfortunately there's a leak here with the management team in Warpaint, which is very disappointing. Very clear that when we've seen the bleeding going on since June as well, you can see here there was a little bit of a bleeding going on until July time. And then really from July time, the stock has just continued to bleed and continued to bleed in earnings. And that screams to me that unfortunately somebody has leaked out these earnings were terrible, and it's got around unfortunately to some of the big dogs in the markets, but not got down to us guys. And I had this discussion on Paul Scott's Substack the other day, today actually, with a few comments, and a few people say no, it's not a leak. It's just people have a little bit more better data than us, and that's kind of true that some of these big dogs do have a lot more better access to credit card data and stuff like that, but for the stock to be sold off as much as what it had done into earnings and the run up into earnings, and then considering how bad the earnings were, it was obvious the market knew that this was going to be a bad update, unfortunately. And obviously, us, the bottom of the pond fish, we didn't know that. 100% sure that there was a leak here, because this update was so bad. It makes sense for why the stock has dropped. Because normally, if you had a stock update like this, this would have normally sent a stock down massively. But the fact that it only dropped 18% on day shows a lot of that was already priced in about the awful update. Because when you were a company like Warpaint, and what Warpaint did is literally on the 17th of June, do an AGM update and basically said, oh yeah, the US is going a little bit slow, but apart from that, we're still doing okay. Keyword that I want to focus on that AGM update is that I can't even find where it is, but somewhere they quoted that trading has been robust. And I'm just trying to find here. Yeah, so he was right on the first word. How did I not spot that? The group continues to trade robustly, and clearly when we've got these interim results, there's anything but robustly in that the update that came out today, which has been obviously a little bit disappointed. And clearly, management have been very slow to update us from this AGM update, and there's no way that the market knew that these earnings were going to be that bad after an AGM update that said we're still going to be in line for full year expectations, to go to the downgrade that is today, and the share price just to coincidentally sold off this much before it. So I said it on yesterday's video. I said that this to me screams out like the market's got the information before we do, and I think that's happened, which is very poor to see that unfortunately that has happened in that situation with Warpaint. But yeah, looking at the results overall, let's just scroll up to these headline numbers here with Warpaint and go to the top. So yeah, we'll get on to revenue. Revenue down up at 8%, which was pretty poor. Gross margins was up slightly. EBITDA was down 9%. Profit before tax was down 41%. Adjusted earnings per share was negative 13%. Cash and equivalents did go up 209%, which is really nice, and they did hike up the dividend at the moment. So first thing, let's start with this revenue situation. So the revenue went up 8%, which is obviously disappointing, because when we look at the forecast that was on the AGM statement on the 17th of June, you can see here that the company said they were going to be between 50 to 52 million. Okay, so that still implies some okay growth there at the moment. So the fact that they have then missed that by that much in 2 weeks to go to the end of the period is very disappointing to see from the business. To be only 2 weeks out and to get it that wrong on the revenue guidance is obviously very poor. And obviously that the big change then is that actually suggests that the company's actually been in decline the last few weeks. And when we go back to the AGM statement here, it looks pretty poor, because if you look here, it says the company continues to replace trade robustly, which I don't agree with, because robustly to me is strong trading. That is totally the wrong word to be using. There's no part of this business that's trading strongly at the moment. And when they did this update in this AGM update, they basically said that there has been a slowdown in the US business, as you can see here. And the problem is that there hasn't been a slowdown in the US business. It's been everywhere. So when they posted this AGM update, why did they come out and tell us that it's been just a US slowdown? Everything was in decline, which is just so poor for management team. And I'm really pissed off with management team. Like, it's been the theme of this week actually, but this is really poor. I think from where they've been from the AGM statement on the 17th of June to where we are now, the fact that they have, the lack of communication in between that AGM update and this interim results, and the tone they gave us on the AGM update to where we're at right now, I think is unacceptable from the management team. And like I said, the revenue came under the guidance they put in the AGM update, which had 2 weeks to go to end the interim results. The other thing as well is, like, they said that UK revenue was up by 15% from 18 million to 15.5 million. But the problem is Architects sales of 6.1 million. But if you look at what they forecast, and once again, this is another error in the AGM statement. They said that the brand Architects is going to contribute around about 5 million. So once again, they've nearly got the Architects revenue wrong by 20% in an AGM update, with 2 weeks to go to the end of the period, which is just incredibly to get wrong. Absolute rookie errors. So the thing is that when you look at the brand's Architects, which is, I think, 90% UK revenue, if you take 6.1 million off the UK revenue, and last year it was 15.5 million here, you can see here that there actually is a decline in the UK growth. Like for like declined massively during that period of time. 6.1 off 18 million. I mean, what, 12 million-ish? Your UK revenues declined like massive amounts in that time period. So when they put an AGM update out here, and they said that they got the revenue guidance wrong, they got the Architects guidance wrong, and then also when they said that it was just the US business, the UK business was actually worse than the US business, and they didn't tell us that, which is just so poor. Gross margins did go up to 45% from 42%. However, a lot of that is because they also increased the prices of the products. So it's not like they're getting scales of efficiency. It's just that they're increasing the prices. Positive is they do have a good cash balance here, which is 17 million, which is great. And that is a positive about Warpaint, is that they are a clean balance sheet. They do generate good amounts of cash, and they've got a good cash pile at the moment. EPS fell a significant amount, as you can see here. We'll get onto that in a little bit. They said that they did increase the interim dividend by 14%, and that is another positive, I guess, for Warpaint, is that this is going to now go over a 5% dividend yield, which is nice. The only thing is that I don't understand, like, if your share price is so beaten up and you've also increased your shares outstanding, no one's buying this for the dividend now. So, and you've also had to downgrade your EPS guidance. So, why not do share buybacks now? That doesn't make sense, because one thing that they point to, as I'm just trying to find the shares outstanding for you while I talk. As you can see here, like, the shares outstanding increased by like nearly 5%-ish. So, why not, if your EPS is declining and you want to like artificially knock up your EPS now, and you've also increased the shares outstanding, why not do share buybacks now? Because clearly that's not going to like make any difference. So why not do like a share buyback now instead of a dividend? That didn't make sense again to me from management team. as well. So you can see they did the price increases, which will have a better impact in H2. Rest of the world sales were up 144%, which I guess is good, but it is a really significant small amount. Look at direct online sales. They as well. They said that it was 1.3 million from the brand Architects, but you take that Architects brand off the online sales, and that online sales is actually down for this period. Once again, I go back to the AGM statement. So on that AGM statement, why were they not suggesting that the online sales had declined? That didn't make sense to me. Once again, a lack of communication. They did point to some store rollouts here, as you can see here, which is Superdrug, 140 stores, Tesco, 150 stores. They also had gifting offerings going into Boots for 350 stores at the moment. Some expansion into Europe as well, and also the US. They also have a 399 stores in CVS, which is great. They did say there is a little bit more weight into the back end of the year, and obviously these are good launches for them to have, which I guess is a little bit of a positive here. They did talk about long-term customer, which is Bodycare, has recently entered administration. Amounts revenue from this customer totaled 0.5 million have been provided in full, but there's a further 0.3 million due to this customer from the trading period end. So once again, why did they not disclose this? We are literally on what we're on now, 10th of September. So why did they not come out and say, put an RNS out saying, oh, just to let you know, one of our clients isn't paying us and we probably won't expect them to pay us? I don't understand that either. Absolutely no mention of it as well. And you can see here today's results. They put with an increasingly weak UK consumer environment, not disclosed at all previously, an uncertain US environment. They are now expecting the company to achieve revenues of 107 million to 112 million, and adjusted EBITDA of 23.5 million to 25.5 million. Now, this is quite significant because this is a big difference as well, is that this now is a EBITDA decline of 30% from the full year guide. So this is the big issue, is that, you know what, I've got all my frustrations with the company previously about, where's the AGM statement gone? I can't find the AGM statement. Where's that gone? I've got issues with this AGM statement around the revenue growth, and the revenue growth being, not suggested how actual bad it was. We did have the feeling that, it was slowing down, but not to these sort of levels in this AGM statement. The other thing is clearly they were so far behind at this point. Why did they not tell us? Why did they not disclose how slow this, this EBITDA was down? To get to this point now where the EBITDA is down so much, a 30% downgrade on EBITDA, and now they're telling us today, it just seems so poor. And, some of that is one-time charges. That's why I guess maybe you want to use the adjusted numbers. Some of that is the cost of the acquisitions for the Architects brand. Some of that is FX impacts as well. But some of that is also going to maintain. They say that some of that is because of the volume. It's because of the weakness in the UK. Some of that is operational costs. And that's clear that, today is that when they have cut the guidance and they've cut the revenue guidance by a significant amount, but they've also cut the EBITDA the guidance by nearly 30%, is that when the broker also put their notes out today, they have forecast the EPS to decline by 29% this year, but also next year they've also expected a 30% decline in EPS next year as well. So this isn't looking like a case of it's a short-term issue. This is something that is going to impact them this year, and also looks like it's something that is going to happen next year. Next year's numbers have been already revenue has been moved down. Also the profitability has been moved down significantly for next year as well. So this company that was previously whatever it was 8 times forward earnings is now 14 forward times earnings, and that's a totally different ballpark when we talk about a company being 8 times forward earnings to 14 forward times earnings for where it is now with all these downgrades going on, which is just really poor. And like I said, the update today is awful, and the fact that it's only down 20% is after such awful numbers proves that the market kind of had a suspicion. If you had this growth company, which Warpaint is, and all of a sudden you're saying, oh, by the way, it's not going to grow anymore, and in fact profitability is going to drop this significant amount, from where it was previously, from this AGM statement here, 100%, the market knew about it, because if it didn't know about it, naturally this drop today would have sent Warpaint down a massive amount, because it was, such a poor update from it. And I guess these positives out there that, the gross margins still, are increasing slightly. I guess you could say that there's still potential for the store rollouts. There's still the pricing increases. You still get a dividend. There's still got a clean balance sheet. There's still a lot of positives with the business. It's just there was just so many negatives thrown from this update that was just so not present in the AGM statement. And the tone from this AGM statement, robust trading, it just clearly, when you look at this update today, it's not. Like, online sales have collapsed. UK sales have collapsed more than the US sales, and that's not even mentioned. And the US sales are being very poor. It's just not poor. It's just so poor, and I don't understand. It's a real big lack of communication from the management team, from being where they were at to where they are right now. It's such a significant drop. A little bit disappointed as well for management team, like, on a day like today, I don't, not that I normally do a webcast on the interim results, but today would be a day that I'd be looking at them going, like, face the music. It's easy being a management team when everything's, flying on the share price point of view, but when it comes down, this is the time where you got to dig in now and say, like, look, what you're going to do to, combat this situation here, give your shareholder base a bit of confidence. And the fact that they just sat there today not doing anything just, screams, really, as they kind of done with these informations to the shareholders, lack of updates for the shareholders. And today, not to face the music today is very poor from the management team. And, when I look at this update today, there's a lot of talk about H2 weighted, and, we expect rebounds in H2 towards the back end of the year. And my problem is with that sentiment is that when you get a company that says it's going to be weighted to the back end of the year after they've just done a profit warning, that's what you never want to hear, because the amounts of times that you actually get a recovery is very slim. And the fact that they've already come out and said, like, oh, just let you know, July and August have already actually got a little bit worse. Well, for this kind of, it's going to be significantly weighted to the back end of the year, gets a little bit more, well, are you going to hit it? Because at the moment, your July and August is getting worse. Probably not. And, I looked at Warpaint's drop today, and, I was really annoyed. I was this close to selling my position, I'll be honest with you. Really, really close to selling my position, because the tone that management have given us, the leak of information, the information they provided us, and then the multi-year downgrades that have come out today, has just been massive. And not even, it's not even like the revenue growth situation as well. A lot of it is around the EPS downgrades as well. And that's been really frustrating. And I was quite tempted to sell the position, but obviously I would be taking around about 40% loss if I was to sell it. My thinking is that, quite a significant amount of that is obviously being priced in now. So is it worth holding, that if they are able to achieve, get back to some form of revenue growth and start showing a bit of recovery towards the back end of 2026, 2027? I personally don't think they're going to see that much recovery as they're hoping for the rest of this year. I think it's a write-off for the next 12 months for Warpaint. So the question is do I just collect that dividend a little bit and then wait for a little bit of a bounce, then cut my losses out? It's still got a good balance sheet, to be fair. Highly, positive in the cash generation. I'm kind of still really thinking on it, to be fair, because the update was so far out from where I thought it was going to be. Like, I knew it was, it was kind of like obvious that there was going to be a profit warning potentially here because of how the share price has been doing, and, the look of it, like there was a leak. But I didn't expect it to be this bad. There's so many things wrong with this report that it really kind of like shocked me how bad it was, and I just didn't have the confidence to buy. Looking at the numbers here, I have downgraded my revenue growth on this company. I have downgraded the profit margins on this company, but I have kept it about 15 times earnings. And, there's still, on the low side, okay upside, mid side, 70% upside, on the high side, 95% upside. And you are getting a lovely dividend. And I'm kind of thinking, well, if they do stabilise this ship a little bit and get back to, a little bit more growth, profit margins kind of maintain where they're at, you could still do okay from this position. And I think, I can still walk away with, break even-ish or maybe a slight profit. But just to see the rapid slowdown and lack of communication from the management team has been a little bit frustrating. I'm just trying to think if there's any points that I've made. I've tried to. It's not often I write notes down on videos, but I did today because there was a lot of things going on in that earnings report that I think there's probably things that when I go, I do this all the time. So I go back to edit the videos and I go, oh, I should have said about that point and that point, and there's probably other things that I probably should have mentioned, and they've kind of just gone out of my head a little bit right now about certain things that are going on with the business, but yeah, it's just disappointing because, like I said, the big thing for me is this tone. Like, from where they were 2 weeks away from closing their interim results, and then we've just seen like, oh yeah, the US is a little bit weak, to that it's not even the US as well. It's like the e-commerce sales, the UK business is the worst part, and they didn't even disclose that. The architects is really carrying them, otherwise it would have looked a lot worse. Like sales down massively. I don't know why they're not buying back shares. It's actually getting worse for them during this period of time. The H2 weighting makes me nervous. I don't know where I'm at completely with Warpaint at the moment. Certainly I'm not a buyer. I can tell you that right now. I couldn't buy just because of how much trust I lost with the management team in this update today. I put it this way. I'm actually closer to selling than buying. I can't buy right now. I can't buy until management team show some sort of either come out to the shareholders and talk to them about what's going on, or start doing some right decisions about share buybacks, or prove it in the financials by actually doing a stronger H2. Until then, like I can't believe them. I can't believe what they're saying, because the multi-year downgrades that have come out today on that EPS, I just struggle to believe, like, why would I believe you to hit your H2 guide at the end of the year? And I'm just so far away from buying. The other thing I'm like I said, I'm more realistically towards like a selling point of view. And the only thing I'm thinking about selling is that I'm kind of selling because I'm just so frustrated with management team and how far they've got it wrong, and I've kind of lost a bit of trust with them. But the other thing that I'm kind of thinking, well, do I hold it? Is that obviously, a lot of that's kind of where they're at right now is kind of baked in. But at the same time, could it get worse? Potentially. They still generate good amounts of profitability. They've still got a good balance sheet. They've still got some of the deals that are coming in. The US growth is still, a good market for them to expand into. Still get a dividend from it. So, I'm sorry, because like normally I like to give you a conclusion at the end of the video, and I haven't, because I haven't got to it myself yet. What I can tell you is that I'm not buying after that update. I'm just at the moment trying to decide if I'm a holder or if I'm a seller. If you gave me like, if this was to show a bounce in the next few days, and the stock, if I end up being, I'm probably down about 40% right now, and if I end up being about 20% down, I'd probably walk away from a position for a 20% loss. That's probably, that's where I'm kind of at the moment. But yeah, it's just really disappointing. Really, really big lack of communication from the management team overall. So yeah, nothing more I can add really overall. So hope there was some useful information in there overall, and we'll kind of I'll kind of have a think about it in the next few days about where to go from here with this one anyway. So yeah, see you in a bit, guys. Thanks for watching.